challenges that are faced in agriculture. And chief among them that we are going to discuss on this webinar today are crop losses and damage. So as a result, the Insurance Pension Commission has seen it fit to bring in stakeholders to talk about agriculture insurance. At this moment in time, I'd like to invite Lloyd Gumbo. He is the Public Relations Manager with the Insurance Pensions Commission. Lloyd, you can take the podium.
Thank you very much, Lynette, and welcome to all the participants and our panelists to this webinar on agriculture insurance. Like Lynette has said, my name is Lloyd Gumbo. I'm the Public Relations Manager at Uptake, and I will be your moderator for the first session. Pamela Nyambara, the Bancassurance Manager at FBC, and Leslie Ndlovu, CEO of African Risk Capacity, are my fellow moderators for the second and third sessions, respectively. Just some housekeeping issues maybe before we proceed with our meeting. All attendees' microphones are muted, while cameras are disabled to avoid disruptions during the sessions. Meanwhile, attendees can type in their questions and comments during the session. We will be able to attend to those, and where questions are raised, we'll be able to refer them to the panelists. Also note that the meeting is being recorded. In the event that you get booted out, with the network issues, please know that we have you covered. We'll be uploading the link on our website after the webinar. Just also to advise attendees that this meeting or webinar is streaming live on HSTV, Zimbabwe Independent, the Standard Newsday, IPEC, Facebook pages, and YouTube channels. So you may share with your colleagues, people within your circles. You may invite them or at least share so that they can follow the proceedings. We will now proceed to the first session, whose topic is the role of insurance in enhancing agricultural productivity. And our panelists this morning, we are waiting for one of the panelists, Mr. George Guamatanga, the Permanent Secretary in the Ministry of Finance and Economic Development. But in the meantime, we will proceed with the panelists who are available. We have the Commissioner, Dr. Grace Muradzikwa, IPEC Commissioner. She's one of the panelists for the first session. We also have Mr. Francis Macheka. He's the CEO of AFC Group. He has been assigned to this webinar to represent the Permanent Secretary, Dr. John Basera, who unfortunately could not make it because of other pressing commitments, but we believe Mr. Macheka will ably represent him. So without further ado, I would like to welcome Dr. Grace Muradzikwa to just give us her opening remarks before we go to the question and answer session. Dr. Muradzikwa, you can proceed.
Thank you, Lloyd. Good morning. Confirm that you can hear me clearly.
Yes, we can hear you, Commissioner.
All right, let me just, okay, so I think allow me to start by acknowledging my fellow panelists on this session. Mr. George Guamatanga, the Permanent Secretary in the Ministry of Finance, Economic Development, and Mr. Macheka, I think representing Dr. John Basera, the Permanent Secretary, Ministry of Lands, Agriculture, Fisheries, Water, and Rural Resettlement. So before I come to the discussion topic, I would like to thank all the panelists, not only for this session, but all the panelists for accepting our invitation to be part of this webinar. One of the functions of the Insurance and Pensions Commission is to develop the insurance and pensions industry, what we call market development. And this webinar is one such initiative aimed at developing the insurance sector, informed by the broader government policy of inclusive growth in line with the National Development Strategy 1 and Vision 2030. We acknowledge the climate change related risks, particularly the threat to food security. Therefore, this webinar, among other initiatives that the Commission is involved in, seeks to ensure that we find solutions to this challenge. Now, coming to the topic at hand, there's no doubt that insurance has an important role in enhancing agricultural productivity. Where there's insurance, financiers feel safer to put in their money, knowing that the risks associated with an agricultural venture is taken care of through insurance. And in other countries where agriculture insurance is more developed, financiers have invested more because of the comfort given where there's risk transfer. And here in Zimbabwe, we've seen this in the tobacco farming, where financiers or tobacco merchants have been insisting on insurance before providing money for inputs or the inputs themselves. And as a result, these financiers or merchants have invested a lot of money knowing that the venture is insured. And generally, farmers, particularly smallholder ones, face challenges with financial resources for purchasing inputs. And to this end, where financiers put in money, they help to bridge that gap. I think the other role that insurance plays in enhancing agricultural productivity is that it gives farmers the license to go for high risk, yet sometimes high value agricultural ventures knowing that they are insured. And without preempting the issues that are likely to be discussed during the sessions, I would say these are the high level roles that insurance can play in enhancing agricultural productivity. I'm looking forward to the 3 sessions where we have eminent professionals, participating as panelists and moderators. And I believe their input today will inform policy going forward. Thank you very much for turning up for this webinar, and welcome to everybody. Back to you, Mr. Moderator. Thank you.
Thank you very much, Commissioner. Thank you for your opening remarks. We will now proceed to our panel discussion, and I will start with Mr. Macheka, the AFC CEO. Mr. Macheka, we know that smallholder farmers account for the bulk of the country's food production here in Zimbabwe, yet the majority of them are unserved and underserved, insurance-wise, which is a big risk to the country's food security, given the danger posed by climate change. From your perspective, do you think it would be ideal maybe for government to consider compulsory agriculture, in Zimbabwe for strategic grains to ensure food security in the country, whether that is sponsored by government or the farmers themselves? Mr. Macheka, you could enable your camera and come through.
Thank you, Lloyd, for that question, and good morning to all the attendees and the panelists. Good morning to our Commissioner, Dr. Grace. I've tried to enable my camera and other view, so hopefully it will come up. I hope you can hear me, Lloyd.
Yes, we can hear you and see you, sir.
Oh, okay, thank you very much. Right, the question you ask is a very fundamental question in Zimbabwe. It is true, the statement that says our smallholder farmers are when we're talking about food security and food crop production, are the main players from time immemorial. I can tell you histories about how these have actually come about. However, you generally find that financial institutions are not very motivated to go and finance these for a number of reasons. One of them, obviously, is the risk involved, which is the subject of our discussion this morning. But there are a number of other reasons, like you hear people talk about transaction costs, because these people are scattered all over, and organizing them and making sure that you get a financial deal out of them, economic deal, is a problem. But I think the biggest challenge why they are not covered by financial institutions is the risk that is involved. When you look at smallholder farmers, they actually put there are many of them, but they put very small hectares of between even 0.5 hectares to 5 hectares in the rural areas. And when you go to the other smallholder farmers, the A1s, you possibly get 5 to 10 hectares. And those individually appear to any person who wants to go into them as being uneconomic. It is because of this fear that as we go through this agricultural transformation and food system transformation strategy, it is the intention of government, and particularly the Ministry of Agriculture, to actually consider compulsory insurance cover. The reason for it is that many people would not go into financing these farmers. And you are aware that the majority of them now are funded through the smallholder Fumvuza agricultural scheme, which is a presidential scheme. It is absolutely essential that this scheme becomes successful and that farmers are protected when it comes to the vagaries or the risks that are involved in agriculture. And the ministry is considering a serious move towards compulsory cover for agriculture, particularly for these fairly helpless farmers in terms of standing on their own. I know that much more larger farmers can actually take insurance of their own, but even for those, the encouragement to bring them to be covered by insurance is actually the major drive. That is the reason, Lloyd and panelists, that government has decided to form the AFC Insurance Company. It might have been difficult, considering the risks involved, to just go to private insurers and say, come, insure these little farmers here and there, without having to actually outlay something ourselves as government to show that we have got our foot in this industry. So yes, to cut a long story short, government is going to go for compulsory cover, insurance cover, particularly for the smallholder from the farmers who are being funded through the government coffers through a presidential scheme. This will help not just the farmers, but even government as a financier to see that the money that is being given around and the inputs that are being given around are not all going to waste because of one freak natural accident of either a drought or a cyclone or all that. So yes, it is true that what you are saying is actually under consideration by government to go for compulsory cover, particularly for the smallholder. Thank you, Lloyd.
Thank you very much, Mr. Macheka. Maybe closely linked to the one that we have just talked about AFC, if you could clarify whether there are mechanisms in place to ensure that there is coexistence with the private sector. Obviously, you would also need the private sector involved in ensuring the farmers to give that support. Are there any mechanisms in place to ensure that there is that coexistence? Thank you.
Thank you very much, Lloyd, for that question. And true, there is no way that AFC Insurance Company is going to be able to take on this giant proposal on its own and survive. For a start, AFC Insurance is a brand new baby that is actually coming into the insurance sector. And it will require the experience that is being given by our insurance companies in the private sector. So there will be some partnerships, some very significant partnerships that AFC is going to go into we know that we are going to try and do things like your weather-based insurance and all that, and we need to be able to connect to the private sector insurance companies that actually are experienced in some of these products that are on offer. So the private sector should not be afraid at all about AFC insurance coming in to crowd them out, because the cake is huge and we can all fit into it. What AFC insurance is going to do, members, is that it is going to open up the space so that any players who possibly were afraid to go into there because of the perceived perils and risks can see that we can actually play in this game in that space. And then there will be an invitation to ensure that virtually every player comes into play. I want to just add one little thing that I should possibly have highlighted in my first discussion. Zimbabwe's agricultural financing, whether you call it smallholder right up to large-scale financing, is too dependent on collateral security, Lloyd. And collateral security, when you are actually funding agriculture, gets to a point whereby it is limited. There's a limit to the houses you can offer to a bank to cover for the development that they need to have on their farms. There's a limit to which you can give any other fixed property security. And this is why insurance is the way to go. Not just in terms of the, financing the farmer, but protecting the crop from inception right up to post-harvest. Thank you very much, Lloyd.
Thank you very much, Ms. Macheka. I will now go to Dr. Mradzikwa. Commissioner, in the quarterly reports that are produced by the Commission, we note that agriculture insurance, it accounts for an average of 3% to the GPW. What would you attribute this to? Thank you, Commissioner.
Okay, thank you, Lloyd. I think there could be a number of factors, both from the supply side and also, from the demand side. I think on the supply side, I think there are issues to do with affordable product relevance. I think, for instance, we need to be asking ourselves, does the industry have products that speak to the needs of smallholder farmers, in terms of quality, pricing, distribution? I also think on the demand side, it may also have something to do with the low levels of awareness, on the importance of insurance in mitigating risks. Also on the demand side, it could speak to prioritization. I think, for instance, our smallholder farmers may know that insurance helps in mitigating risks, but they may not have the money, for premiums. So under the circumstances, all they do is pray, that no risk materializes. We have a good season, we have good rainfall, and that affects their output. And I also think that, they could also be militating against the uptake of insurance in general. There are people who have strong views against insurance, who think that insurers are only there to take premiums and not to pay claims. And I think this is something that as an industry, we need to work on. And so, one of the major concerns, I think, raised by policyholders is that insurance companies shortchange them, when it comes to claim settlement. And, and what are you doing about this? And obviously, I think these are the issues that we are engaging the industry on. And, our problem tree, this year is actually working on confidence, restoring confidence, to the insurance industry. And that also applies, I think, to all those underwriters, who are currently engaged in agriculture. Thank you, Lloyd.
Thank you very much, Commissioner. I would want to pose this question to both of you. I will start with Ms. Macheka. Maybe given the strategic importance of agriculture to the country in terms of food security and economic development, there is a school of thought that believes that for insurance, for agriculture insurance to make sense in Zimbabwe, there is a big role that the government should play in terms of development of agricultural insurance. They think there is need for government to come in with subsidies, tax incentives for the insurers to develop insurance products that are appropriate, particularly for the smallholder farmers, again, taking into account that government is one of the biggest funders of agricultural inputs in the country. Do you think there is a role that government should play in terms of developing agricultural insurance in Zimbabwe? Mr. Macheka?
Thank you very much, Lloyd, for that. It is true that when it comes to government involvement, it is one of the prerequisites. As you heard from the commissioner when she was talking, one of the biggest challenges you face with insurance is that sometimes the pricing becomes prohibitive, particularly when it comes to agricultural insurance. The rates that are added there, you add that to the interest rates that somebody is getting a loan for. It actually can put the product out of reach for a number of people. So it is okay if you are dealing with large-scale farmers and large-scale corporates. They can always make a plan, and generally they have a plan in terms of their insurance product. However, to get insurers to be interested in coming to cover the smallholder farmer, given the importance of the smallholder farmer in the drive towards food and nutrition security as we move towards Vision 2030, it is absolutely essential that government gets involved. The involvement can be in so many forms. Direct subsidies sometimes might not be encouraged because, that's one of those things we don't really encourage. And I was hoping that Mr. Guamatanga would be available at some point to talk about that. Subsidy is not a thing that government normally drives for. However, there are a lot of other incentives that can be given to insurance companies for them to play in this space. But I just want to emphasize one thing, Lloyd. Insurance is a business. While government will do the best it can to give enabling environment for companies, ultimately, the responsibility rests squarely with the companies themselves to be able to be innovative enough to come on board and be able to offer a product that is relevant for the type of clientele that we are talking about. Thank you, Lloyd.
Thank you very much, Mr. Macheka. Yes, Commissioner, the concern is insurers sometimes feel it's very expensive to develop products that are appropriate for the smallholder farmers, given the diverse, the diverse clientele that they have, the geographical issues. Do you believe or do you think there is a role that government can play in terms of developing agriculture insurance?
Thank you, Lloyd. In my view, I think there are a lot of government agencies, I think, that have been put in place to spearhead, I think, this role. So I think whilst government in itself, may not, be able to play a direct role, there are a lot of government agencies, starting with the Ministry of Agriculture itself. And, we have Mr. Macheka here, from the Agricultural Finance Company. Their role is actually to spearhead, agriculture insurance and to future-proof, I think, agriculture, in general. Even when you look at the commission, ourselves, like I said in my opening remarks, one of our roles is market development. So I think that, amongst, I think, all the other government agencies, we need to collaborate and actually make sure that the industry, is able to outlay, affordable products, which speak, like I said, I think, to the needs of small farm holders. We also have, and I'm really glad to see Mr. Leslie Ndlovu, who will also be taking one of the panels, the Africa risk company. And I think, as you know, government, is a very active, player there. These are all agencies, I think, which, in my view, they have a role, to play. And so government has done its part. And it's really up to us, to make sure that, we come up, I think, with inclusive products and inclusive programs, that really speak to the needs, of the farmers. For me, I think one of the things that we probably need to stop doing is just, to give inputs without, securing, without the necessary risk transfer, to actually make sure that I think we continue to have financing, for our farmers. What is wrong with actually insisting that, if you are going to get inputs, you also need to take up insurance, so, it has to go hand in hand. I think we'll probably see a lot more development and a lot more productivity than we are currently seeing, if perhaps I think we make this compulsory. But, like I'm saying, Lloyd, I think there are a lot of government agencies, that have been created, to play this role. I do not think that this is something that government, should directly be involved in. We are here to play that role. We have the industry is, in my view, I think, well developed to be able to come up with the products. This is a private sector role, and they need to take up this responsibility. Thank you, Lloyd.
Thank you very much, Commissioner. Maybe closely linked to that, the concern that is sometimes raised by policyholders is that insurers have a tendency of shortchanging them when it comes to claim settlement. What are you doing about this as the regulator to ensure that there is fair treatment of consumers? I think this will be key, even as we are pushing for restoration of confidence in the insurance industry. Thank you, Commissioner.
Okay, thank you, Lloyd. Well, I think it's important to note that insurance is about selling and buying a promise. I've always said, and I'm on record as saying that insurance is for ladies and gentlemen. It is not for charlatans. You are selling a promise, and you need to be there when it is time to pay a claim, not to be ducking and diving. So we need ladies and gentlemen who live up to their promises, whether it's a policy holder or an insurer. Yes, regrettably, we have cases where, some insurers try to find excuses not to pay a claim, even if it's a legitimate claim. And there are also cases where policyholders, are filing fraudulent claims. And ordinarily, insurers should not be paying fraudulent claims. As IPEC, our mandate is to protect the interests of policyholders, and we expect insurers to settle valid claims timeously. The Commission has created a dedicated market conduct supervision unit, which looks at market conduct issues as well as handling complaints, from policyholders, who feel that they've been shortchanged by insurers and pension funds. And we've also issued a treating customers fairly framework to the insurance and pensions industry to ensure that they treat customers fairly. Unreasonable post-sale barriers, we expect insurers not to frustrate their customers. If anything, we expect insurers to use claim settlement as a competitive advantage, over each other. This is really where they need to prove that that umbrella is there, for the consumers. And I think the more we settle valid claims, I think the more we'll find that the uptake, for insurance will actually increase. Consumers will see the relevance, and the need, for them to take up insurance. And I think the onus is on us, as an industry, to make sure that we do this. But as a commission, I think we're doing everything possible, to make sure that policyholders are treated fairly, and that we do not necessarily have charlatans in the industry. Thank you, Lloyd.
Thank you very much, Commissioner. Mr. Macheka, maybe from your perspective, when we're looking at low levels of awareness amongst the farmers, particularly the smallholder farmers, don't you think there is a role for extension services workers or extension workers as they play that advisory role to raise awareness or to sensitize smallholder farmers about the need to mitigate risks associated with agriculture through insurance? We have had cases in the last few months of last week, we had an issue of wheat that was destroyed by fire. We also had cotton that was destroyed by fire, and we also had a farmer who was transporting his cotton, and the truck was involved in an accident. So under such circumstances, do you think extension service workers or extension workers have a role to play in terms of sensitizing smallholder farmers about the need to mitigate such risks?
Thank you very much, Lloyd. That is a very important question, especially when we are looking at smallholder farmers. It is very true and absolutely essential that in our curriculum or in our training programs for our extension staff, insurance becomes part and parcel of the offerings. The reason for it is that even as insurers, the companies go on board to try and cover the smallholder farmers, it is not possible for them to reach everybody. Whereas extension staff actually go to meetings, they go to field days, they go to all sorts of places where they meet all these farmers together, and where they can even have demonstrations by people who have been saved by taking on an insurance. So it is very true that we need to capacitate our extension staff. And it is one of those things that need to be driven into the in-service training programs, as well as even putting it into the curriculum of the colleges where these people come from. It is very important because coverage, when you consider the numbers that we are talking about, cannot be done by an individual insurance company that wants to do that. And yet, when you're talking about extension staff, you are looking at people who have got good ratios of, say, maybe an extension worker having 4,000 people or maybe 2,000 people coverage. And he sees those people every single time that they are growing their crops. It is important that training is given to our extension staff to pass on this message. Originally, people used to just go and talk agronomy. But there are real risks, and the risks are not just failure to get inputs, but some disasters that can be brought about by a number of these perils that we all know about. Yes, in a nutshell, we need to train our extension staff to be part and parcel of this insurance revolution that we're talking about. Thank you, Lloyd.
Thank you very much, Mr. Macheka. As we wind up our session, maybe Commissioner, if you could come in and advise on the developmental role that you spoke to, that the Commission has in terms of agriculture. What initiatives are you putting in place as the regulator to develop agriculture insurance and to ensure that we have inclusive insurance in the country, which is aligned, obviously, to the National Development Strategy, to Vision 2030 of leaving no one behind. This is a key theme even for the Sustainable Development Goals. What measures are we putting in place to ensure that there is that inclusive insurance? Thank you.
Thank you, Lloyd. So, you know, as a regulator, our strategies and activities are informed by government policies. For instance, Vision 2030 and the National Development Strategy 1, you know, anchored on the UN Sustainable Development Goals, you know, what we are calling the SDGs, and the theme leaving no one behind. So, you know, our strategies and processes, you know, endeavor to achieve inclusive insurance. And to achieve inclusive insurance, the Commission, we've introduced a microinsurance framework. We introduced it in 2017. in line with the National Financial Inclusion Strategy 1. And the objective of this framework is to facilitate access to affordable insurance, for people with low and irregular incomes. We are in the process of developing the National Financial Inclusion Strategy 2 right now. And specific to agriculture insurance, the Commission is currently participating in 2 innovation labs, actually, to come up with a solution to climate change related risks. In that lab, the one which is currently being spearheaded by Access to Insurance Initiative, we have all the key stakeholders represented, including the Ministry of Agriculture, the insurance companies, and also the farmers. And all things being equal, we expect a cutting-edge solution, to come out of the innovation lab for the benefit of smallholder farmers. This is just one, I think, of the many initiatives that we are currently involved in. But I just want to assure, I think, all the attendees that the Commission stands ready to play its part and is indeed doing that. Thank you, Lloyd.
Thank you very much, Commissioner. We have some comments and questions on the platform. Mr. Maubire says you are on point, Commissioner. Government should not take over insurance product development from the industry. Thank you. Then Moses Chorombo asks Mr. Macheka, he says you indicated that AFC Insurance is muting partnerships with private insurers. What criteria will be used to pick these partners? Mr. Macheka.
Thank you, Lloyd. I think when you are choosing a partner, you want to actually choose a partner that you know has the same aspirations as yourself. In other words, what I'm saying, Lloyd, is that when we are going to be taking on partners to assist us in this development, we are looking at people who will not consider smallholder farmers as a waste of time, who will be so afraid to go into there with us because they think the risk is too high. So those are some of the issues. The relevance and the congruence of your objectives is going to be one of the major aspects. The other things that we are talking about are issues of skills and technological development. When we go into this, we don't want to go and make the same mistakes that everybody else has made in the past. We want to go in there with cutting edge, as you heard the commissioner say, technology and all that. So when we're looking at partners, we are going to looking at partners who are going to enhance the offering that ASC is going to give. Thank you, Lloyd.
Thank you very much, Ms. Macheka. Maybe, Commissioner, as you are pushing ahead with the objective of inclusive insurance, there is a challenge that regulators face today, which is achieving that proportionality between promoting innovation and at the same time protecting the consumers against products that may not be appropriate for these consumers. What is your take on this with respect to IPEC? Thank you, Commissioner.
Okay, thank you, Lloyd. I think that's a big challenge indeed. I want to agree, which regulators, I think, the world over are grappling with. Insurers are coming up with products, that can be easily distributed through mobile phones compared to the traditional means of distribution. Where policyholders would be given a pack to read, the terms and conditions of the policy. But, with InsurTechs, one can actually sign up for a policy, on their phone. And, for us to regulate the industry appropriately and also ensure that we promote innovation, we are capacitating the Commission staff to ensure that they are better informed when handling product applications. This is why, I'm on record as saying that it should be in everybody's interest to make sure that the Commission is suitably resourced, with persons and experts, who understand the market, and the products, which are in the market as well, so as to be able to handle, product applications, efficiently. So I think the objective here is to ensure that we approve products that meet the needs of the consumers. And, while we promote innovation, we are alive, to the need also to protect consumers. We are also looking at introducing what is now called regulatory sandboxes in our market. In fact, I think good progress has been made. We've been collaborating with central bank to introduce, regulatory sandboxes. And this is what has happened in other countries. A regulatory sandbox is more relevant now, given the technological advancements and the way insurers have also embraced technology, in their operations. This will reduce regulatory hurdles for companies that want to introduce new concepts and products. And, we are really looking forward, I think, to testing some of the products that the market is coming up with through the regulatory sandboxes. Thank you, Lloyd, and I hope that is helpful. Thank you.
Thank you very much, Commissioner. Maybe as we come to the end of our session, any parting shots before we go to the second session? Commissioner, then we'll come to Mr. Macheka.
Thank you, Lloyd. I think for me, it's really it's a challenge. I think, firstly, I think to the industry to make sure that we remain relevant. We remain relevant, to all, our customers. And Zimbabwe is an agro-based industry, and we cannot. There's no way that we can not pay attention, I think, to this sector. So we need to develop products, that are relevant, and that will also make sure that we remain relevant. And I think to all the other stakeholders, we have a part to play. We all have a part to play to make sure that we develop this industry, and to also make sure that we are offering products that are relevant to our consumers. And I think this is really a challenge, and I'm hoping that as we proceed, I think, with this webinar, we all have some takeaways and some key learnings out of this. Thank you, Lloyd.
Thank you very much, Commissioner. Mr. Macheka, your parting shot.
Thank you, Lloyd. What I just wanted to say is that insurance is going to be the future of all financing. And our encouragement, obviously, is to financial institutions to take it on board as one of the major things that they can use to finance farmers. AFC insurance has not been registered yet, licensed, but we are very close to satisfying our regulatory requirements so that we can become properly licensed. When that happens, we will then hit the ground running. Only then can we be talking about the partnership that I was actually referring to. Smallholder farmers are very important to our country, and it is very important that we look after them. If you talk about the type of achievements that were done by Fumbuza farmers in this just gone agricultural season, I think you will find that even for anybody who wants to get into there as a business partner, they will find it really interesting to do so. So what we are saying is that government is very keen to get any insurance company of their own to go into here. But there is no plan whatsoever to sort of crowd out our private sector partners, because this is a big, when we're talking risk, the more you share it, the more it becomes less and less of a risk. Thank you, Lloyd.
Thank you very much, Commissioner. Thank you very much, Mr. Macheka, for your contributions during the first session of our webinar. We will now proceed to the second session on the factors that are affecting the uptake of agriculture insurance. And to moderate that session is Pamela Nyambara, FBC Bancassurance Manager, and the panelists on that panel are Mr. Paul Zakaria, then Mr. Brian Chirema. Mr. Paul Zakaria is representing the Zimbabwe Farmers Union, and Mr. Brian Chirema is representing term insurers. We also have Ms. Leswela. She is the Director Insurance at Uptake. Maybe before we come in, Pamela, we would want to pay that moment. Thank you, Pamela.
Sorry, I didn't get you, Lloyd.
Sorry, I said maybe before you come in, we would want to just allow our sponsors for live streaming this event, would want to play their promotional material. Thank you.
Old Mutual Finance Private Limited is a microfinance company that is a member of the Old Mutual Zimbabwe Group. It was first licensed by the Reserve Bank of Zimbabwe in January 2017 as a credit-only microfinance company. The company's key focus is to provide financial solutions to financially excluded Zimbabweans with a strong focus on supporting sustainable business growth.
Since 2017 to date, Old Mutual Finance has served customers through a diversified product range, which includes business loans for groups, individuals, and registered SMEs, agribusiness loans for smallholder farmers, order finance loans, educational loans, civil servant loans, and salary-based loans.
Repayment period is from 1 to 12 months. Hashtag microfinance for your needs. Get a loan from Old Mutual Finance. Tora loan kubva Old Mutual Finance. Tata loan e Old Mutual Finance. Mina ibizo lami nguJennifer Mahonye. Ikhampani yami ithiwa yi-Asmos Investment. Ngiyathunga ama-school uniforms, corporate wear, ama-curtain, ladies, le-menswear. Ngaqalisa ukusebenza le-Old Mutual ngoMeyi 2017. Lapho eyaqalisa khona ukupha ama-loan. Ngathatha i-loan yami yokuqala eyokuphakamisela lokuthuthumeza ibhizinisi yami ngoba ngangilo msebenzi owawufuna imali. Ngakwanisa ukwenza umsebenzi wami ngesikhathi umuntu engisebenza laye i-relationship officer uzinikele ukuthi umsebenzi wami uhambe ngaphambili. Khathesi ngathatha i-loan yami esi-6 eyiyo engincedisayo ukukhula emabhizinisini ami. Ngile shop engilayo e-Eastgate Market lapho engithengisela khona izinto engizithungayo lalezo engiziwodayo. Ne-Old Mutual uyaphumelela.
Over to you, Pamela.
Thank you very much, Lloyd. Good morning to everyone. Welcome to our second session of the Agricultural Insurance webinar. I'm just going to introduce to you our panelists. Our topic for this session is factors affecting the uptake of agricultural insurance. For this discussion, we've got Mr. Brian Chirema. Mr. Chirema is the Chairperson Technical Committee from the Insurance Council of Zimbabwe. We also have Mr. Paul Zakaria, who is the Secretary General and Head of Secretariat for the Zimbabwe Farmers Union. And lastly, we are also joined by Mrs. Sibongi Lesiwela, who's the Director Insurance and Microinsurance for IPAC. Welcome to our panelists. Maybe I'll start, go straight into it and start with Mr. Chirema. From the supply side, as an insurance provider, what do you think are the reasons behind the low uptake of agricultural insurance products? Mr. Chirema, over to you.
Right, thank you, Pamela. Let me also acknowledge the presence of our esteemed regulators, panelists, and guests. Right, Pamela, there are many of them, but let me focus on the 4 key ones. The first one is to do with the cost distribution in the product. You know, I'll start with smallholder farmers because these are the ones that we are focusing on. You know, insurance services for smallholder farmers is costly and complicated to design and also deploy in the market compared to insurance services for commercial farmers. And here's the reason why, you know, I say so. Number one, you know, smallholder farmers in their individual capacities are too small to make it economically viable to pursue them as individuals. To make it viable, an insurer has to aggregate them. Whilst there is some homogeneity in these farmers, but just as with any other customer, there are also individual needs that you have to respect for these smallholder farmers. Otherwise, if you don't do so, you'll find that not all of them will take up insurance cover. So the major issue that we have is aggregation of these farmers. It may seem very easy with the technology that is now available. We've got mobile technology, we've got internet, we've got this and that has come up, but it has proven that on the ground it's not that easy. It's one of those things that looks easy when you're in the office, but when you're at the point of deploying these products or trying to come up with a scheme, you will know that it's not that easy. So this is where the issue of pricing comes in. To make it viable for the insurance companies to offer products to these small-scale farmers, the pricing structure has to take into account the issues that I made mention of, which is the distribution of the products. They're trying to access these farmers. And this is where I think the issue that a lot of farmers cry with that insurance is expensive arise from. Whilst we have, you know, index-based covers, for example, such as with the index cover, which have proven very successful in other countries and also even in the pilot projects that have been done in this country, there's still also the issue that they do not address all the requirements and needs of these smallholder farmers. So there's something that is still left out even with some of these products that have come on board. So as a result of that, you still find that farmers still mention that they don't quite satisfy their needs. I think lastly, it's also the issue to do with education of farmers. I think quite a lot we've also come across as an industry that there's very little awareness on the importance of insurance and even what they need to take as insurance cover. So the process of trying to understand what a farmer needs and what we can offer as an insurance industry, I think there's still some communication gap there that needs to be addressed. It then brings me to issue number 2, the issue of trust. You know, trust is a two-way traffic. So we do acknowledge that there are also issues of trust from farmers in terms of how the insurance industry has handled them. I think we have had quite a lot of issues come up where there's some unhappiness in terms of how claims were resolved. But also likewise, I think as the insurance industry, we also have our own trust issues as well with that part of the community that we serve. I think we've had cases where even aggregation has been done. We fail to collect premiums. Some of the claims that eventually come through, we realize that you know, they've not been done well, and therefore they've resulted in huge losses. So there's quite a lot also along the issues of trust that has resulted in some insurance players actually not willing to participate in that area. Number 3 is the issue to do with skills. That is also limiting, I think, the uptake of insurance. We must admit that there's a gap of skills in the insurance industry when it relates to agriculture insurance. The perfect scenario would be a case where you've got an agronomist who is very good, but who also understands insurance very well. To get that type of person who is a good agronomist, but at the same time understands insurance very well, is quite difficult. And the efforts that have been done by the industry and individual companies to train these individuals is also seen them, once they get to a certain level, they actually leave the country and go for greener pastures, and they become more attractive in foreign markets. So the lack of skill has led to a situation where We continue to use policy wordings that were copied from the past, but that have not been adapted to the developing needs of the market. And quite often we land ourselves in a scenario where farmers rightfully then say we are giving them insurance on something that they don't require and we're failing to satisfy their needs. We also have then an issue of misaligned products. And one of those glaring areas is livestock, where you find that what we are offering as an insurance industry is by and large not satisfying the needs of the farmers that are there. The last one is limited government support. Some of the policies, especially destined for use by smallholder farmers, I think require government support in the form of compulsory insurance. For example, the government through departments such as the Ministry of Agriculture has got extension officers in all the country's province. We believe that this can play a major role in raising the awareness of insurance product. And because of the trust issues that I made mention of, if government does step in, it may help to diffuse some of the issues that are obtaining on the level, along the lines of trust. So I think in a nutshell, those are the 4 major issues from a supply side that are limiting the uptake of insurance. Thank you.
Thank you very much, Brian. Maybe my next question, you touched a bit on it as you were presenting. There are concerns in the industry that as insurers or as service providers, we are not really developing appropriate products for the market, particularly our smallholder farmers. Is it that the industry find those uninsurable, or because the tendency is for us just to force out or force into the market the products that we have instead of coming up with bespoke products that are suitable for those farmers? Maybe your comment on that.
First and foremost, smallholder farmers are insurable. In fact, in some of the trials that have been done in pilot projects that I have also personally worked on, it is proven that if smallholder farmers are harnessed very well, and if a good product is designed and deployed, say in a specific provincial area or district area, they're quite profitable. And to take it back into the insurance industry, there are many products that have been developed. I think one such product that comes quickly to mind is index-based covers. For example, if you look at weather index covers on maize, we have had those running for years and they've proved successful in the areas that they've been deployed. For example, in Chiweshe, there's a pilot project that has been running there for quite a number of years, and it has worked very well for that community. So the products are there. However, I think the issue goes back to what I made mention of, that the cost of deploying these products is quite high, and I think this is where the limitation is. So it appears as if nothing has been done because the outreach in the market is not at the level where it should have been. For the market to notice that something has been done, it has to be very visible, it has to reach many people, it has to be known by people, and that has not happened. Even this pilot project that I made mention of in Chiweshe, I mean, it has been running for years, but if you ask people, on the other side, or, for example, if you pass through Harare and then go on the other side, say it's Seke communal areas, thereabouts, they don't even know the existence of this. So I think this is where probably the work needs to be done. Find a way of coming up with a cost-effective structure of deploying these products, making them visible, and also allowing them to reach all the corners of the country. But in terms of the design and the availability of products, I think for me it's the distribution that we need to work on to make sure that they're accessible.
Thank you, Brian. Maybe touching on on the golden leaf, tobacco farming. It's one of the sectors where merchants and funders actually insist on insurance as a condition for receiving funding or inputs. How has been the industry's experience in this area?
Right, yeah, tobacco is a big issue. I don't know where to start. But, let me say one of the greatest things about tobacco is that the merchants, the financiers have always insisted on insurance. And I think there is a good structure that was created many, many years ago, and some laws that were put in place to guide how tobacco insurance is handled. And they've also done very well to reach out to small-scale farmers. You know, in all the areas of the countries where we visit, you will find that there's quite a significant participation in tobacco. But I think to do justice to this question, let me look at it in terms of you know, commercial farmers and traditional players that have been there in the tobacco industry. The experience with these from an insurance perspective, I would say, has been good. There are structures that work, that were put in place. There's adherence to and respect to these structures by merchants, by financiers, by auction floors, and even by commercial farmers. And we are happy with the vetting criteria that is used by the players in this industry that eventually take up insurance. We've got traditional merchants and auction floors that collect premiums on our behalf through the TIMB Stop Order Act, and they do remit the premiums to us insurance companies. However, you know, the experience has been not so good with small-scale farmers and with new merchants and auction floors. Look, there are some that are good, but from experience, what we've discovered is that I think some of the new players that have come into the game, you know, sometimes they leave you wondering whether they're in the game for tobacco or for other reasons. We've had cases of side marketing, and it's rare to come across a commercial farmer who will do side marketing, but with small-scale farmers, I mean, it's a perennial problem, and it's one that has, you know, perpetuated itself for many years. So we've got an issue of side marketing, which eventually leads to us failing to collect premiums because tobacco premiums are collected at the end of the season, and therefore it compromises the capacity and capability of insurance companies to pay claims. We also have new entrants in the merchant space and auction floor space that has started manifesting itself in the past 5 years, where contractors and auction floors collect premium rightfully, as mentioned under the TIMB Stop Order Act, from farmers, but they pocket this premium and then they don't remit it to insurance companies. Or sometimes they ignore deducting insurance premiums, whereas these are a prescribed cost which must be applied first ahead of all other loans that farmers take out, and they only concentrate on their own loans. So, you know, if you look at tobacco book, on its own, it's a volatile book. And we have a situation where we are now having to also include credit risk on top of tobacco book, which is already volatile by nature. And, you know, it's unsustainable for insurance players. So we are losing a lot of money as a result of that, and it compromises our capacity and ability to meet claims in the future. So I would say, I think that's how it's playing out. The traditional players, they've done well, but I think the new entrants, we've come across some nasty experiences.
All right, thank you for that. This arrangement, I think you also mentioned, as you were also speaking of the tobacco farming, given the arrangement where farmers are insured on credit and have to pay premiums after the sale, would it be possible, in your view, for the same arrangement to be extended to other agricultural ventures?
Let me start by saying the insurance model works well where premiums are paid upfront. It allows for insurance companies to build capital and capacity to meet claims. And this is the model that the insurance industry has been built on world over, and it has proved successful, and it has resulted in stable insurance companies and industries across the world. And it's more important in our local environment where there are currency risks that are obtaining. Now, moving on to this issue, you know, there are already problems existing in the tobacco sector, as I made mention of, which we believe need to be ironed out. And I think it would not be desirable and wise to duplicate this model to other crops in the agriculture sector where we already have existing problems in the tobacco sector. Otherwise, we'll be duplicating those problems in other areas and even placing ourselves in a more difficult space. Agriculture claims by nature can be very huge, and in a bad year, individual claims are large and they also come in many. And, you know, if my memory takes me back to 2013, 2014, and then 2017, 18 summer season, I mean, we had some large claims when some insurance companies decided to suspend underwriting agriculture for a while to recover. So, yeah, you know, trying to extend that same facility to other crops at this point in time, I don't think would be the best of move. Look, it would be something that would be desirable, provided all the systems are there in place and all the mitigatory measures are there in place, and everyone is really abiding by the rules and playing according to the game. But I think as it stands, we have some few problems that need to be ironed out first before we even consider that.
Okay. Maybe my last question to you, Brian, would be, are there any specific interventions that the industry expects from the regulator or the government for them to develop appropriate products for farmers?
Yes, there are many. I would like to start applauding our regulator, IPEC, for arranging this forum, and I know there are a number that they've been doing so. It's very important for us to meet with all the stakeholders in the agriculture space, discuss these issues, and also look at areas of exploiting opportunities. So it's something that we applaud and that we commend our regulator continue to do so. Now, going specific to the government, there are a number of areas we believe the government can help us to make insurance penetrate to the smallholder farmers and to the rest of the agriculture sector. I think number one, the issue to do with retooling of the Met department. Coverage in a number of areas is not good, it's poor. Yes, whilst there is satellite technology that is now available, but we have learned out of experience that ground weather stations still play a critical role in adjudicating claims and in getting the most accurate data on weather conditions. And we have found that when we interface with the Met department, they don't have coverage in some of the areas, or the statistics that are coming out of there are not that good. So it's one area that we would like to appeal to the government to capacitate that department. It will then allow us to roll out index-based programs for smallholder farmers. Then number two, Mr. Macheka made mention of the issue of subsidization of premiums. And, I know economists do not view subsidies in good light. But, when you look at smallholder farmers, these are quite a lot of them, if not about 80% of the sector, they are living hand to mouth. And when droughts happen or when excessive rainfall happens, these are the ones that are hardest hit. For them to afford insurance, it's an ask that they can't meet. And I think there is need to come up with a structure at a national level that assists those farmers to meet premiums, or the government then may consider setting up insurance pools that are designed for smallholder farmers. We've got expertise in that area, and it's an area that we are happy to work with the government in setting up this structure and provide our capacity and expertise. The other area is also making insurance compulsory. As an example, motor third-party liability insurance is compulsory. However, matters to do with our stomach, are left to the unknown and to chance. It is important to ensure that insurance, especially for structures such as Command Agriculture and the Presidential Input Scheme, come along with compulsory insurance. That will make those schemes viable, in our opinion, and also sustainable for the long term. So for farmers to access inputs from those schemes, ideally, they must then take up insurance as well. Last but not least is the issue of side marketing. We really need the government to come up with something strong in that space. To our knowledge, there are no specific laws around side marketing. And it's one of the areas where we've continued to have leakages, and it's one of those areas where some insurance players have decided that they will not get into the agriculture space because the mechanism of collecting premiums has got loopholes. If the government can come up with specific laws in that space, it would greatly improve the participation of insurance players in that space. And also the other area, just comes to mind is that for those students that are going to agriculture colleges, if the curriculum can also include insurance as a subject, it would then greatly help to raise the awareness of insurance as these students are leaving the colleges and going into the market and starting to practice. If they have got insurance knowledge, it will help them to know what needs to be done. We also have regulators such as the TIMB, the Grain Marketing Board, the Agriculture Marketing Authority. We believe that if they also continue to work with us, I think it will help us to come up with symbiotic opportunities and relationships that help the industry to move forward. Thank you.
Well noted. Maybe before you leave, I'll just read the few comments in our chats. One from Albert. He's saying, great initiative to bring insurance to the grassroots. However, given the new risk-based capital frameworks, hope is that we don't end up burdening the government with additional capital requirements for AFC insurance. That's a comment from Albert. We also have a comment from Moses Chourombo. Moses is saying, yes, Brian, awareness is very key across the agricultural value chain and stakeholders. Then another comment from Clyde T. Maponga. Improving farmers' creditworthiness is of vital importance. Agricultural insurance can act as a catalyst for achieving that. There is need for an all-stakeholder approach that involves coming together on board of both government and the private sector, particularly in the building capacity and training of extension staff. Thank you very much, Clyde, for your comment. Again, Clyde Maponga came through with another comment. Very true, Brian. Government support on smallholder farmers is key in creating sustainability and resilience. It will go a long way in reducing burden on government and perennially funding these farmers. Then Wellington Nyapimbi also came through with this comment. Whilst agri colleges can introduce insurance lectures, the insurance colleges like NAST can also introduce agricultural insurance modules to their degree course outlines. Thank you very much, Wellington, for that comment, and everyone who came through our chat. Thank you, Brian, for your contributions. I think I'll have to let you go for the time being, then go on to our next panelist. Thank you. Our next panelist is Mr. Paul Zakaria, who's the Secretary General and Head of Secretariat for the Zimbabwe Farmers Union. Welcome, Mr. Paul Zakaria.
Thank you very much, Pamela.
Maybe my first question to you would be, your organization represents commercial farmers, some of who insure their ventures, and we also have those smallholder farmers who generally do not insure. How has been your experience with insurers as farmers?
Well, thank you for that question. I'll begin also by acknowledging the other panelists that are on this platform, and the regulators who have also made it possible for us to interact. Now, to your question, I would also want to say that quite a lot has been shared by Brian, and I'm in total agreement with most of the things that he shared with us, especially with regards the experiences that farmers have had with the insurers, and also that it is a two-way kind of experience, where it is not just one-sided, it is also the other side making contributions. The number one thing that I would want to mention here is bordering around trust. Some years back, the Zimbabwe Farmers Union partnered with an insurance company, and there were some specific risks that were supposed to be covered. And when the farmers needed to be indemnified, the response from the insurance company was not very, very good. Just a little bit of what was promised was then covered. And for the greater number of farmers, there was no cover at all. And you know how it is with word moving, and it is word of mouth. So even those that had not insured or joined that particular product, they also caught up in that very same frenzy where they felt it was everybody had been cheated. So trust is an issue, and for the same reason, the ZFU has been very skeptical going into such partnerships, because the area arrangement and the union a very bad name, and so there has been this hesitancy in terms of engaging the insurance players. So unfulfilled promises are one very, very huge hurdle The next thing that I would talk about is linked to that same issue of trust, that farmers feel shortchanged in many cases. Talk about tobacco, talk about soya farmers, talk about wheat farmers. They all raise such issues. And some of these things could have been in there in the documents, and then it is the fine print. Someone was not taken through, properly, and this adds up to the challenges. And the other aspect, which is not really about trust, is related to costs. The farmers do view insurance as prohibitive in terms of costs, and they relate this to their thin margins. So when markets do not perform and a farmer is expected to provide themselves with an insurance cover, they then begin to prioritize, and they say, look, if I put in so much, what is going to be my bottom line? But of course, this begs another area, which is the third area, about awareness and education, which Brian covered very, very eloquently. Farmers do not have knowledge, especially about the benefits of insurance. And while this can come from various other quarters, sometimes it is important that a company that has a product or that has designed various products should actually, do campaigns, blitz of campaigns, go out there, educate the farmers, and let's have this happening on a daily basis. Thank you, Pamela.
You are muted, Pamela.
My apologies. Thank you, Mr. Zakaria, for those comments. I think you actually touched on my second question, which is asking why the majority of smallholder farmers are not insuring. I think you actually touched on that. So my third question would be, what are the expectations from the farmers? What do they expect from insurers when they develop products?
Well, yeah. Also on the issue of why smallholder farmers are not insured, I'll just also add a few things. The lack of innovative products. Brian spoke about the difficulties in deployment, aggregation, and so on and so forth. But I think it is also the lack of innovation amongst our insurers. May be blindly accusing, but history can help us to understand this issue more, in a better way. Before the year 2000, we had distinct groups of producers. You had your white commercial farmers who knew and understood insurance, and who could actually use insurance products to unlock other values elsewhere. And yet we had the small-scale commercial farmers from the purchase areas, Matenganyika, and the communal farmers. This very smallholder farmers that we are referring to in this webinar. Now, these two groups of producers were living in totally different settings. And all our commercial entities and financial institutions were very much in agreement in as far as servicing the commercial type of a farmer. One, they were not difficult to reach. Two, their scale was big enough. Hence, we have these terms like the viable and can actually viable and commercial, which are very good terms. But no one goes into agriculture not to make money. And no one goes into agriculture to remain a small farmer or a little farmer. My brother Macheka actually referred to them as little. So no one goes into business to remain little. Everybody wants to make money. And commercial is a term that can be used even among smallholder farmers. Commercial then really refers to the issues of turnover, the issues of profitability, and that they are not just growing for their own, sustenance or subsistence. So we really need to see these opportunities. So in the year 2000, with the land reform program, things changed. The terrain changed completely. Now, instead of the large-scale commercial farmers that we were used to, banks, insurance, we would run into that sector and we would get all our products sold. Now we have, new farmers, a new set of farmers with totally different requirements, which begs now for the insurance sector in particular to again go back. I like Brian's way of referring to it, that we really need to now understand this type of a farmer. What are their risks? And we cannot generalize these risks. We cannot say because we've seen this happening, in the year 1990, therefore the same risks are the farmers are still experiencing the same risks. Things have changed from a production risk perspective, looking at the environment and so on. So things have changed. Now, I had to make this point because it is crucial that we understand that with the passage of time, things have changed. And the type of farmer that we have is a different one. Therefore, we need to innovate. So we need innovative products that address the smallholder, needs, not to just be risk averse and then move away from them. When we aggregate and deploy in a cost-effective manner, we certainly can make business as insurers as well as farmers. And then I mentioned the thin profit margins. Those ones are also an issue when it comes to uptake of insurance, and limited knowledge, of course, on the benefits of agricultural insurance and the issues of trust. But then the expectations, I'll just mention a few here, which of course have been mentioned earlier by Macheka and Brian. In addition to education and awareness, there is need also to subsidize insurance for the smallholder farmers. So subsidies in that regard, as he has said, is true. As economists, sometimes we feel, wherever you subsidize, somebody is actually picking the tab somewhere. So there is going to be an overburdening of a certain arm somewhere. But the benefit compared to the investment, what are the results? That's what we should be focusing on. And then also including insurance in the costing of the government provided input schemes. And it serves a purpose here. One, it safeguards the command agriculture, for instance, these are loans. So if we put in an insurance component in there, it means that we are safeguarding value either way. And the same goes also to contractors. They need also, the private contractors, they need also to include insurance in the costing of their schemes. And the last thing that I think, which is coming actually from the farmers, is yes, we understand the issues to do with weather index insurance and all that, and the farmers' intuition, we work with them as well. But when you talk about such complicated and sophisticated, covers like weather index insurance, with the downside where you have your Met Department not forthcoming and so on. Farmers are concerned more with the yield cover, and there is a great expectation in there that we need our yields to be covered. Whether you're bringing in this cover from a climate point of view, but the thing is, as you design these products, can we cover the yield? Let's go down to the micro level and look at the yield itself. The other factors that contribute to yield decline and so on, can they be looked at and covered and be covered holistically? So sometimes with weather index insurance, you are looking at a whole big area, and in one portion of the area, farmers may have good rainfall, and yet just 100 or so meters from the such farms, the story could be different. So we are looking here at the yields, and we are saying, how can the yields be covered? Thank you very much, Pamela.
Thank you, Mr. Zakaria. I'm sure Brian and fellow insurers are taking notes on what the farmers actually want instead of, them giving what they think the farmers need. Thank you for that. Maybe my last question to you, Mr. Zakaria, would be, one of the major issues is that insurers equally don't trust farmers. I think Brian also touched on this earlier on, for fear of fraudulent claims. What is your comment on that?
Yeah, it's going to be a very brief one, because I believe this occurs everywhere and in many other sectors. It's not just in agriculture. So it's a risk that both parties will have to be dealing with. We have seen others, causing their own accidents, vehicle accidents to get, covered or to get indemnified and so on. But I believe in continuous assessment, and especially in the smallholder setup, we can come up with, with means by which farmers do police each other in terms of trying to cover such risks and minimize the fraudulent nature of claims. So it is a risk that we will have for a very long time, but we need to really come up with monitoring and assessment measures to ensure that true and bona fide claims are honored. Thanks, Pamela.
Well said. Thank you, Mr. Zakaria. Maybe before you leave the platform, there are a few comments on our chat. One is from David Nyabaza. He says, I think that on subsidies, the market would want to see government subsidize premiums as a risk financing mechanism. Government is already carrying the residual risk through funding inputs. Funding premiums will transfer that risk from government, making budgeting easier and finite, as opposed to ad hoc funding when disaster strikes, as amounts required will be many times the value of the premium. Thank you very much, David, for that comment. We also have Uganda represented in the House from Munya. Munya says, I agree with you, Mr. Nyabaza. This is working well here in Uganda. The idea is to make sure it is not perpetual, but phased out over a 10-year period until the industry can sustain itself. The trick is to have the industry work together in tandem to pool resources, skills, and lobby muscles. Thank you very much, Munya, for that comment. And Clyde Maponga comes through again with a comment. True lack of transparency and trust in the insurance processes is true. We should not hide away from that. There is need for farmer participation in parameter setting on parametric insurance. The need for farmer participation in parameter setting on parametric insurance is key. It will reduce the information gap and give the necessary transparency. It will also provide the key knowledge on the products, technicalities, and nature of products available to the market. We also have a comment from Maradze James. With regards to partnering insurance companies, it is important to note that insurers are not the same, and due diligence processes have to be done to check on the company itself and its track record and financials over the years. IPEC and ICZ, IPEC and ICZ can assist in such cases. The cover provided to farmers should be mutually agreed on and farmers educated by insurers themselves using existing membership structures and extension officers. The Treating Customers Fairly framework referred to by the Commissioner earlier represents one among many improvements made by the regulators to ensure fairness and accountability for insurers for the benefit of all farmers. Thank you very much, James, for that very elaborate comment. Clyde says, true, Mr. Zakaria, insurance should be treated as an input, just like fertilizer, even in government programs like Fumbudza. It will help in creating the much needed sustainability. Thank you, Mr. Maponga, for that comment. And again, David comes through with another comment. Mr. Zakaria, it is over 20 plus years now since the land reform. Is ZFU developing a database to flush out errant farmers, as happens with banks? This will assist in eliminating the moral risks and make farmers more insurable. Mr. Zakaria, I may have to call you back to answer to this one.
Yeah, sure. Thank you very much, Pamela, and thank you, David, for that question. Looking at flushing out errant farmers, like what happens in the banks, they flag, say blacklist some farmers and so on. We are actually working together with stakeholders in the industry. Agricultural Marketing Authority, the Ministry of Lands and Agriculture, private contractors, and the Farmers Union to develop one central database of farmers. Because you see, if we just do it on our own, there is definitely there's going to be an information gap there, which will then allow certain errant farmers to then slip out. So we decided to come together with all these other institutions to ensure that we come up with one central database. As a farmers union, we know who real producers are, where are they, and what is their contribution to the economy. And also Agricultural Marketing Authority, they do the regulations of the markets. And we have now private players that then fund, including government, that then fund agriculture. So there is common interest in ensuring that those who are coming in to just, taking advantage of the situation may actually be excluded. So yes, I agree with you, David. There is actually a database that is being developed as we speak. Thank you very much, Pamela.
Thank you, Mr. Zakaria. And at this juncture, allow me to introduce to you our third and final panelist for this second session, Mrs. Sibongile Siwela, who's the Director of Insurance and Microinsurance from IPAC. Welcome, Mrs. Siwela.
Thank you, Pamela.
Mrs. Siwela, the Commission is participating in the Innovation Hub, which is spearheaded by Access to Insurance Initiative. What does this, maybe you can just share with the team, what does this Innovation Hub seek to achieve?
Thank you, Pamela, for your question. It is actually the Innovation Lab that the Commission is participating in, together with the many stakeholders in the insurance value chain. And these are the insurance industry. We also have the International Insurance Development Partners, Ministry of Finance, Ministry of Agriculture. We also have in the lab farmers associations, and as well as technology-driven institutions. So the third Inclusive Insurance Innovation Lab is an international one-year program where 4 country teams composed of key stakeholders from the insurance sector develop and implement innovative insurance solutions to increase resilience of the most vulnerable segments in our society against the impacts of climate change through innovative insurance solutions. The Innovation Lab is a unique opportunity to foster change in the insurance industry as it seeks to enable dialogue and mutual learning amongst key stakeholders of the insurance sector. It also seeks to equip participants to take leadership within their sector and organization, as well as inspire participants to take action and support implementation. It is a great opportunity for the insurance industry to develop new and innovative industry solutions to to climate-related risks that the country is facing. Thank you, Pamela.
Thank you, Mrs. Wela. Maybe if I may kindly ask you to switch on your video so that people can get to know the face behind the voice.
My camera is actually on.
I don't know if it's me, but we can't see you. Maybe let's move on to the next question.
Okay, there I am. Thank you.
Now we can see you. Thank you very much. My second question would be, farmers argue that insurers are not developing appropriate products. I think you've heard these, throughout the discussions, products that meet their needs. As a regulator, do you think the industry has done enough in this area in terms of developing appropriate products for the farmers?
Thank you, Pamela. I must acknowledge that there is a product gap in the market, and that different insurers are doing something. Everyone is doing something differently, sometimes half-heartedly. There is no concerted effort by the insurers or by the risk carriers to provide agricultural insurance products. There is some effort, yes, but it's not sufficient to carry the nation forward. And I would urge the insurers to come up with the relevant products for the agriculture section. On our part as the regulator, we are also in discussions with one of the international development partners to assist us with the implementation of the weather index insurance in this country. So much is being said and so much is being done at different places, but really there is no concerted effort as a nation to say this is where we're going with the agriculture insurance. So the international development partner is going to help us, amongst other things, with the development of the carrying out of a feasibility study. We need to know how feasible it is for Zimbabwe to do weather index insurance. They are also going to assist us from a regulator's point of view to develop a regulatory framework to guide the industry on how to proceed with the agriculture insurance. And at the tail end of the program, they will assist us to develop the industry in terms of capacitation, to close the knowledge gap, to educate the takers of the insurance product, as well as to educate the regulator staff members on agriculture insurance. And we do hope that this will, in a very big way, close the existing gap of product development and product knowledge. Thank you, Pamela.
Thank you for that very elaborate response. Maybe lack of trust in insurance companies is one of the factors militating against efforts to have smallholder farmers take up insurance. What do you think the industry should do to restore trust in their customers, in their consumers rather?
Thank you, Pamela. As an industry, I think we owe it to the policyholders to develop trust and to increase the level of confidence in the insurance industry. I think lack of trust is on both ways. Sometimes insurers also have mistrust on policyholders, and also policyholders have mistrust on policyholders. So as a way forward, the insurance system going forward, starting from 2022, we have said our theme for 2022 is going back to basics. And we believe that if we go back to basics and we do everything right, everyone doing everything right in their capacity, we will be able to restore confidence in the insurance industry, both to insurers and policyholders. So at this point, I would like to urge everyone, particularly the risk carriers, to go back to basics and in a way that will see us increasing confidence in the market.
My last question to you, Mrs. Suela, is one of the major issues is that insurers equally don't trust, who should sensitize farmers about the importance of insurance? Is it the insurer or the regulator?
Thank you, Pamela. I think we both have a role to play, but it's more of insurers than the regulator. They interact with the farmers on a face-to-face basis. The regulator's role is complementary, and I would urge the insurers to do everything in their capacity to educate the farmers in this aspect of their business.
Thank you, Mrs. Suela. I don't see any comments in our chat section. Maybe your final words, your parting shots before we end the session.
Thank you, Pamela. I think there are misconceptions about agriculture insurance. It has worked in other jurisdictions, and I think it can also work in Zimbabwe. There's no way it can fail in Zimbabwe when it has worked in other jurisdictions. I also think that the Innovation Lab, because it has an international flair in it, we are participating in the lab together with the other countries, 3 other countries, that is Zambia, Zimbabwe, Costa Rica, and Grenada. I think we'll also learn some things from what other nations are doing. I urge all the stakeholders involved in the Innovation Lab to participate and to help each other. Thank you.
Thank you, Mrs. Suela. I'll go to Mr. Zakaria. Any parting shots before we wind up the session?
Sorry, Pamela, Mr. Zakaria had to dash. They have a colleague who passed away last week, so he's gone for a funeral. He has gone to the burial.
That's unfortunate. Maybe Brian. Brian, are you still in? Your parting shots?
Yes, I am. Thanks, Pamela. Yeah, I think the need for engagement is there. There's need to continuously engage, the farming sector. On our part, I make note of the issue that Mr. Zakaria raised. Yes, there's need to respect the farmers. In fact, we need to look at them as clients. In fact, they are clients and not as farmers, but look at them as clients. And it's always important to respect the client and also understand the needs of the clients and find a way of delivering the solution to them. So it's something that we'll continue doing as an industry, and continuous engagement will help us to resolve the matters that are there, and also even allow us to develop products that are bespoke and that deliver value to them.
Thank you very much, Brian. I think there's one comment which came through our chat from Moses Chaurombo. Thank you, Pamela, for the question on relevant agricultural insurance product. Insurance brokers also partner with both insurers and the insured, who are farmers, to tailor-make insurance solutions that mitigate specific risks that are unique to the risk under consideration. Brokers work mainly to protect the interests of the insurers and hence are key to bridge the gaps in awareness by the insured. Thank you very much, Moses, for that contribution. What is left for me is to thank our panelists for such an elaborate and informative discussion and make way for our final session. But before I call upon Leslie to introduce our panelists for the final session, I think we'll allow our sponsors, to come through with whatever they have to come through with. I think we'll give this time to our sponsors. Thank you.
Short-term insurance, what is that? Any type of insurance that covers your possessions is short-term insurance. Having cover for your prized domestic possessions, business assets and activities gives you a hassle-free life. Make short-term insurance a part of your life and know that your wealth is secure. Imagine waking up to a home ransacked by thieves or a business interrupted by a factory fire. You probably won't panic because you're insured. You tell yourself, keep calm, my insurer has it covered. There are 18 insurance companies in Zimbabwe that provide short-term insurance. Short-term insurance is the safest way to protect your wealth against life's uncertainties. Get your life back quickly when disaster strikes. Get covered today by your preferred short-term insurer.
Zita rangu ndinonzi Jennifer Maonye. Company yangu inonzi Asmos Investments. Tinosona ma-school uniforms, ma-curtains, corporate wear, men and ladies wear. Ndakatanga kushanda ne-Old Mutual muna May 2017. Ndiri customer yavo yekutanga kutora loan. Ndakapiwa loan nekuda kwekuti ndakanga ndine basa raida mari kuti basa iroro riitwe ripere. Ndakwanisa kutora loan iyi kanoita kechi 6 ndichibatsirwa na relationship officer we-Old Mutual Finance. Vaindibatsira nekuuya vachiona kuti basa riri kufamba zvakanaka here, maorder angu ari kuenda nenguva here. Ndave neshop paEastgate Market pandinoisa zvinhu zvandinenge ndasona kuti ndikwanise kutengesa ipapo, uyezve ndichihodha zvimwe kune vamwe vanenge vachiitawo mabasa avo emaoko. Ne-Old Mutual Finance unoenda kure.
Old Mutual Finance Private Limited is a microfinance company that is a member of the Old Mutual Zimbabwe Group. It was first licensed by the Reserve Bank of Zimbabwe in January 2017 as a credit-only microfinance company. The company's key focus is to provide financial solutions to financially excluded Zimbabweans with a strong focus on supporting sustainable business growth.
Since 2017 to date, Old Mutual Finance has served customers through a diversified product range, which includes business loans for groups, individuals, and registered SMEs, agribusiness loans for smallholder farmers, order finance loans, educational loans, civil servant loans, and salary-based loans.
Repayment period is from 1 to 12 months. Hashtag microfinance for your needs. Get a loan from Old Mutual Finance. Tora loan kubva Old Mutual Finance. Tata e-loan Old Mutual Finance. Mina ibizo lami nguJennifer Mahonye. Ikhampani yami ithiwa yi-Asmos Investment. Ngiyathunga ama-school uniforms, corporate wear, ama-curtain, ladies le-menswear. Ngaqalisa ukusebenza le-Old Mutual ngoMeyi 2017 lapho eyaqalisa khona ukupha ama-loan. Ngathatha i-loan yami yokuqala eyokuphakamisela lokuthuthumeza ibhizinisi yami ngoba ngangilomsebenzi owawufuna imali. Ngakwanisa ukwenza umsebenzi wami ngesikhathi umuntu engisebenza laye i-relationship officer uzinikele ukuthi umsebenzi wami uhambe ngaphambili. Khathesi ngathatha i-loan yami esi-6 eyo engincedisayo ukukhula emabhizinisini ami. Ngile shop engilayo e-Eastgate Market lapho engithengisela khona izinto engizithungayo lalezo engiziwodayo. Ne-Old Mutual uyaphumelela.
Welcome back to our third and final session. And just introduce to you our moderator for the final session. The topic is weather index-based insurance as a solution to climate change-related risks. And Leslie Ndlovu will be taking us through the third session. Leslie is the CEO of African Risk Capacity. Over to you, Leslie.
Hello, good morning, everyone. I hope you can hear me very well. It's really a pleasure to be joining the session today, and I'm extremely delighted by the discussions that we have had because agricultural insurance is an extremely important part of the building resilience in Africa. When you look at agriculture in the African context, it contributes 1/3 of the GDP and employs about 2/3 of the labor force. So it's really vital that as the industry, we can come up with solutions for this important sector. Today, we will have a panel that will advance the discussions that have already taken place today. And I'm extremely happy that we are joined by Commissioner Godfrey Kiptum from the Insurance Regulatory Authority in Kenya. We will have Mr. Humphrey Mulele, who is with Mayfair Insurance in Zambia, giving us the private sector view from an insurer on the ground. And we will also have Mr. Crispin Mawadza, who is with the World Bank, who are also quite active in this space. So I would like to welcome all the panelists, and if you may please turn on your videos if you can, so that everyone can see you and welcome you. Welcome, Crispin.
Hello, hi.
Welcome, Mr. Kiptum. And Humphrey, are you on the line?
Good morning. Is it good afternoon?
Thank you. So then the discussion today is going to be a very interactive discussion. We will structure it through a series of questions, but all the panelists are really welcome to chime in with their experience because everyone has a very interesting and rich view that they could contribute to the discussion. And we will have some time at the end for comments and questions from the attendees. Maybe starting with you, Commissioner Kiptum. Kenya has been at the cutting edge of innovation as regards agricultural insurance, and we have a lot of things that we can learn from the Kenyan experience. In your view, what would you say have been the key regulatory considerations when it comes to promoting the use of weather index insurance?
Thank you very much, Leslie. I think just to give you a background on how agriculture is important for us, I think as earlier stated by yourself, we have more than 30% of our GDP coming from the agricultural sector. Quite a number of people are also employed in the sector. And maybe for the longest time, we used to have from quite a long time, I think in the 1930s, we used to have a scheme where we call guaranteed minimum return. This ran very well until around 1978 when it was discontinued for, of course, many reasons and many challenges. But then in the recent past, the government has really laid a lot of emphasis on agriculture insurance. We currently have just completed a policy on agriculture insurance that will guide the uptake of that cover. And the government has engaged in a lot of promotional activities, which I know you are aware of, in terms of increasing the uptake of insurance for this sector. So nonetheless, on weather insurance, you know, Kenya is one of the countries that is faced with a lot of drought quite often, maybe between 3 and 5 years, we have a cycle of drought, especially in northern parts of Kenya, the rangelands. We also have a number of other challenges like locust invasions and other catastrophes that affect agricultural production. Are you hearing me properly or you are struggling? Okay,
No,
thank you.
we hear you loud and clear, sir.
Thank you very much. So in terms of weather index insurance, the country has developed, we have now developed rules and regulations for weather index insurance, and we are expecting this to come into law very soon. The Insurance Act has been amended to provide for this. So we are in the process of providing for an enabling environment that will enable private sector players to play a key role in this kind of insurance coverage. Of course, as you may very well be aware, especially for yourself as the moderator and the people in Zimbabwe, the government has a program that has been running on weather index, which we call Kenya Livestock Insurance Program. This has been running from about 2010 and basically focused on the areas where there is the greatest vulnerability. And you will realize that this is 100% subsidized by government. There is also a possibility that you can be able to buy cover for yourself. There is also some subsidy for people who buy on voluntary basis. Then you will realize that the enrollment is also being done by government because it encourages and does the enrollment on behalf of the insurance companies that are running that project. So there is a kind of partnership between government and the private sector entities to provide. But this index is meant basically for drought, so you can do very quickly. Huge areas. Coverage is extensive for the areas that have been selected, but we also expect that it will be rolled out into the other areas that need to be brought on board. So basically that is what it is. And I'm happy to answer any questions that moderator you may have, or I can go into the role we think government should play in terms of that. But I'm at your service.
Thank you very much for the comprehensive answer, Commissioner Kiptum. And to me, you know, there are three things that have stuck out from what you've said about creating the enabling environment for innovation, a strong partnership with the government, and making sure that the insurance programs are demand-led. And we see, I think, the important role that regulators play in encouraging the adoption. If you can also just share with us, based on your experience in Kenya, the work that you have done with the industry to encourage them to adopt agricultural insurance and be able to provide it to the people that need it the most.
Thank you very much, Leslie. The government and the authority has brought in together the players, both from the private sector, brought in the farmers through educational programs, provision of the subsidy, and the program is run by the Ministry of Agriculture together with ourselves. We provide technical support to the ministry. But in terms of obtaining cover from the farmers, yes, the CLIP program runs on its own through an approval process that has already been given by the authority. So the program runs, they recruit farmers, the government enrolls them for them, the premium is paid, and then when it comes to a point of claim, then the assessment is done through satellites to inform that, yes, the drought has come in, the forage is not enough for the animals to continue living. Then at that point, the payment is triggered. And the trigger, once it is triggered, then it is paid by M-Pesa through the contacts that had been given by those farmers. And we confirm that they have received, or if they have any challenges, then they let the ministry know, or the insurance company, whichever they find most convenient at that point in time. And we have not had many challenges, apart from, of course, people changing their contacts and their telephones, and then they can't be paid when the time comes. And of course, then you start getting complaints that we haven't been paid. But generally, it has run very well, and it is to be upscaled now to cover many more regions in the coming days. Thank you.
Thank you very much for that, and I'm really delighted to hear about the role that the regulator is playing in enabling the private sector to provide solutions. So maybe at this stage, we can bring in Mr. Humphrey Mulele from Mayfair Insurance in Zambia, which is one of the leading players in the agricultural insurance sector. And Humphrey and his team have seen significant growth in the number of insured farmers since they launched their insurance program. So Humphrey, if you can share with us today, what has been the driver, the key driver for the significant increase that you have seen in the number of insured farmers, and for you, what was the breakthrough moment when it comes to agricultural insurance?
Yeah, thank you very much. Thanks for having me. So as Mayfair, we started as part of our portfolio diversification strategy. We embarked on weather index insurance in the year 2014, where we first ran a pilot through the Zambia National Farmers Union, covering 1,500 farmers, smallholder farmers in 2 districts of the Copperbelt province. So thereafter, we saw an increase both in number of aggregators. In this case, I'm referring to the institutions that brought the farmers together, and also in terms of farmer numbers. So we saw an increase from 1,500 up to about 18,500 in 2016-2017 season. And then in that season, we were given an opportunity to pilot index insurance on a government subsidy program, on the Farmer Input Support Program. So we were given an opportunity as Mayfair to pilot index insurance with the support of our partners, financial sectors, depending Zambia, Musika. And we were given this opportunity to pilot on 3,000 farmers in the southern province of Zambia, where we recruited that number of farmers on a voluntary basis to try out index insurance. And because that was a very bad year, we made quite some payouts, which payouts now demonstrated value in terms of what the farmers received. And then in the next season, which was 2017-2018, through a bid process, we were given an opportunity to extend this index insurance to the entire Farmer Input Support Program countrywide, which had 1 million farmers. So at that point, we moved up in terms of numbers from 18,500 to 1 million farmers countrywide. So this did 2 things. One, it gave us scale, tremendous scale. And then the second thing that it did was to give us geographical diversification in terms of the areas that we're covering. Unlike when we're doing pilots, which were limited or localized to certain areas. So the risk was diversified countrywide. And I would say at that point, really, that was the breakthrough, really, because of those 2 things. So scale was achieved, and then diversification of the entire portfolio geographically. So really, in terms of the key, the reasons for the breakthrough, like I mentioned, the first thing really is because of the claims payouts that we made prior to that season, which demonstrated value. The second thing was because of this partnership with government on the Farmer Input Support Program, which partnership was based on issues around respect, trust, shared goals, and volumes. Because the government on the Farmer Input Support Program had this database of 1 million plus farmers, which database we suddenly were able to access and roll out index insurance.
Thank you very much, for that. And you touch on two very important things. I think the first issue is around distribution of insurance, because then when it comes to agricultural insurance, like unlocking distribution through aggregators or through the government, as you said, I think is key, because we know that collectively the market is big, but then it's not. It would be subscale to approach one farmer at a time. And the second thing that really stood out for me was just demonstrating the value of insurance. As we all know, insurers don't always have the best reputation, especially when it comes to paying of claims. But I'm really happy to hear that we're getting to a point where we are no longer running pilots, but we're really building scale and diversification, just like we would with any other product. Maybe to Mr. Mulele, to ask you a controversial question. Some players in the industry are not convinced about agricultural insurance because they think it's heavily loss-making and is more linked to corporate social responsibility than a real business opportunity. In your experience, how have you been able to balance, on the one hand, affordability of the premiums to the farmers with the need that we all have to generate profits for our shareholders?
Yeah, thanks for that. So from my perspective, really, what needs to happen from the supply side is that when you are designing these products for smallholder farmers, you must employ a demand-based approach. Empathize with them, put yourselves in their shoes, so that at the end of the day, you're able to understand whatever challenges they are going through. In this case, we're talking about climatic risk, really. We're talking about issues around droughts, we're talking about issues around excessive rainfall, and issues about dry spells. So the idea at the end of the day should be that you come up with a product which is quite responsive to their needs. These climatic risks that I've faced, that I've mentioned. Additionally, you also need to have a product that is accessible, because having a product on the shelf is one thing. Having to roll out this product, you really have to have an effective distribution value chain, like you mentioned. So in upscaling, really, you now, rather than relying on an aggregator to distribute this product to over 1 million farmers, that's where now you come up with digital solutions, which are end-to-end, to take into account all the steps in the customer journey. So we are talking about issues of farmer enrollment, issues of premium collection, issues around awareness of the product, because that is very key. This is a new product, so awareness really is continuous. And then finally, you need the claims distribution, a system that allows for you to distribute claims efficiently, real time, and at low cost. So that is key, because once you digitize, then the whole distribution cost, you are able to lower it because of digitization.
Yeah, absolutely. I completely agree with everything that you have said. And then, you talked about the claim that you paid out a few years ago. One of the criticisms of index-based insurance is basis risk, where you have farmers on the ground having suffered a loss, but then this loss is not fully reflected in the models. And this can be, either perceived losses whereby the index was not supposed to trigger and it didn't trigger, but you could also have real basis risk where the index should have triggered but didn't. what has your experience in managing basis risk been like? And do you have any insights that you can share with everyone on the call today?
Sure. So basis risk is a real challenge in index insurance. And as Mayfair, there are a few things we've done in trying to address that challenge. Unfortunately, it is not a challenge that can be eliminated completely. But one of the things we've done, to start with, when we're issuing the policy document, which is the contract, we've inserted a loss verification clause in the primary insurance contract, which allows for us to make limited field visits at the end of the season to be able to verify and just increase that correlation between, like you mentioned, the satellite data source and the actual experience on the ground. The second thing we have done is that in some of our pilots, with the help of our partners, we have embarked on installing some ground-proof instruments, such as automated weather stations and rain gauges, to make sure that farmers record rainfall, as an example, on a daily basis. And then that on a monthly basis. So throughout the season, farmers are able to record the rainfall. So at the end of the season, when we get that those satellite data reports, we're able to compare with what farmers recorded on the ground, and we're able to make tweaks, just again as a way of increasing that correlation. The other thing we've done is that we have embarked on continuous product improvement. So at the end of the season, we do what we call a validation process, where we get back on the ground, in some cases hold focus group discussions with the farmers to get an understanding of how the season went and what they perceive, what their perception of the payouts is, whether the payouts are reflective of the experiences that they suffered on the ground. So we use that feedback to come back now and make further tweaks to the product. In this regard, what we have done is that the initial product that we have when we started was more weighted towards drought. So over the years, what we've done is that we've divided this product now into 3 agroecological zones. So zone 1, which is the southern part of Zambia, the product there has been weighted more towards drought because that's a drought-prone area. Then you have the central region, which is like zone 2, which is more of a mix. So the product there, it's weighted like 50% towards drought, and then 50% towards excessive rainfall. Then up in the northern areas where we have excess rainfall, we've weighted the product more towards excess rainfall, so 70-30. So 70% of the product is weighted to cover excess rainfall and 30% towards to cover drought.
Yeah, that's great, because then it shows the ability to respond to the specific client needs. And maybe to bring in Crispin into the conversation at this stage. Crispin, the World Bank has been one of the pioneers and promoters of index-based insurance for a very long time now. You ran the hard yards when it comes to capacity building and improving everyone's understanding of the product. Can you share with us maybe what the World Bank has been doing to promote agricultural insurance, maybe with both a historical perspective and overview of what you're doing now and how you see this reshaping in the future?
Thank you so much, Leslie. So I'll also try and give a context of disaster risk management and how the scale, the level of loss that the world is faced with, given the increasing frequency of pandemics and natural disasters. So since 1980, more than 2 million people and over $3 trillion have been lost to disasters caused by natural hazards, with total damages increasing more than 600%, from about 23 billion per year, that is in the 80s, to about 150 billion per year in the last decade. So this is these are the thresholds or the quantums that we're talking about that the world is suffering as loss due to disasters. So mainstreaming disaster risk management into any development planning could really help reverse this trend and at least offer some safety nets to the victims of natural disasters. And once you have got the instruments to reduce the impact, or at least to finance the losses, you are likely to build a more inclusive society with about 31% reduction in the average loss. So the instruments that you have been discussing about since morning are essential in reducing that impact. So the linkage between agriculture and insurance is obviously apparent. You have discussed about this, and any change in the climate has a significant impact or effects to on crop yields, livestock. We've had cases from Kenya already, and agriculture's vulnerability to weather and disaster risks is very, very, very apparent. You know it all already. This has been discussed. So what instruments do we have as the bank, as the World Bank? So we've got, I'll discuss about 2 or 3 instruments that we use, some of which are not yet available in Zimbabwe, but could be available, as Sibongile has mentioned, how as a development partner we're going to support them with a TA program. So we have got the Disaster Risk Financing Facility, Global Risk Financing Facility, which we call GRIF, launched in 2018, which helps to strengthen the financial resilience of vulnerable countries by establishing new and scaling up existing risk financing instruments, including insurance and other market-based instruments. Then there's the Disaster Reduction and Recovery program that we have. The global, it's a global facility also as well. But what is closer to what we are discussing is the Global Index Insurance Facility, the GIF facility. I'll say more about the GIF facility and also to answer parts of your questions. The Global Index Insurance Facility is a dedicated World Bank group program that facilitates access to finance for smallholder farmers, micro entrepreneurs, and microfinance institutions through the provision of catastrophic risk transfer solutions and index-based insurance in developing countries. It's a facility that is funded by G7 countries, including the European Union, Germany, Japan, and the Netherlands. And so far, since 2018, about 4.6 million contracts have been consummated, with over $730 million in sum insured, covering approximately 23 million people across the world. And primarily, these are in Southern Africa, Asia, Latin America, and the Caribbean. Unfortunately, agriculture insurance and disaster insurance are either unavailable or prohibitively expensive in developing countries. So the innovation that index insurance brings about, as has been mentioned before, is that you payout on benefits payout is on the basis of predetermined index or loss of assets or investments resulting from a weather or catastrophic event. And it doesn't require much of the traditional services insurance claims assessors are looking for. So it allows for claims settlement to be quicker and more objective because of the predetermined triggers for claims. So the GIIF, the G facility, is our landmark program that we have for developing countries, and I think Zimbabwe is eligible to benefit also from the TA and capacity building that this facility has. So I'll move ahead and mention what GIF has done in Africa. So in Africa, one of our implementing partners is ECA Africa, which was incorporated as a brokerage company with support from Syngenta Foundation for sustainable agriculture. So ECA has developed weather, area yield, and livestock insurance, livestock index insurance products that cover a wide range of crops, daily and dairy cattle in Kenya, Rwanda, and Tanzania. And we are also, the GIF is also involved in about 14 francophone countries in West Africa. So this is what I can say. We from the bank perspective, our mission is to boost shared prosperity. So we cannot alleviate poverty without having the instruments to cushion those that are vulnerable. And agriculture insurance and weather-based index insurance is one such instrument, because you know that about 500 million families in the world are based on subsistence farming, representing about 2.5 billion people in the world. So these instruments are really essential to cushion a vast number of people in vulnerable communities and in developing countries. Leslie, this is what I can say for now, without wanting to talk much about the relationship that we're going to have with the IPEC on weather index insurance. Thanks.
Thank you very much, Mr. Mawaza, on that. And I really like your phrase on boosting shared prosperity. That is a noble ambition indeed. And just in terms of how you work with local regulators and with the insurance industry, you've already indicated maybe the relationship that you have with IPEC. But given the fact that we have Mr. Mulele here, who's also working on agricultural insurance, how can we all join forces between the regulators on the one hand, as represented by Mr. Kiptum, the private sector as represented by Mr. Mulele, and the World Bank is represented by you. So maybe if all the speakers can just come in with their views while we wait for the audience to put their questions in the chat. Maybe Commissioner Kiptum, if we can start with you, please, on how you can enhance the relationship with other partners such as the World Bank.
Thank you, Leslie. I think on our part, we have started a number of relationships with many people with a view of promoting agriculture insurance in this country. And we have a number of initiatives that we have had with the World Bank. The livestock insurance program has been developed ourselves with the World Bank. We have another project that is currently ongoing between ourselves and the World Bank called DRIVE that will cover many countries in the Horn of Africa, that will be run by the private sector, and basically that would be ZEPRI and Africa Risk Capacity. And that is a program that is coming in the next few days, but it is all geared towards supporting agriculture insurance, especially in the dry areas, so the rangelands of Kenya. But we also have a number of programs that are running currently with the institutions. One is Syngenta, ECA Africa, running a program with farmers, seed growers, there is guarantee insurance that if your seeds doesn't germinate, then they will give you new seeds so that you can replant. And they will also give you for the area yield index insurance, which is a collaboration between insurance companies and the farmers. So all this is happening. But of course, one of the most important things that we want to emphasize upon is that the insurance companies then must develop products that will meet the requirements of the farmers. And one of the things that we want to really emphasize is that those products must be simple for farmers to understand. They must be understandable, it must be accessible and affordable, and that it must add value to those farmers, and that it should be run efficiently so that then the costs can be met by that efficient running. And you could reduce costs through use of technology and also massive distribution, the scale, you upscale and then the costs will come down. So those are the things that we think with the kind of collaboration that we can be able to get, if we are able to implement this, then we think we'll be able to get that kind of upscaling. And of course, the product design is very important. And of course, there's a lot of distrust among the public on a number of insurance policies because people don't understand what it covers. Once you don't understand what it covers, then you make a claim at the wrong time. It will be rejected, and you think you are supposed to have been paid because of basically that lack of understanding. So awareness is also one of the things that needs to be emphasized upon in the coming days. Thank you, Leslie.
Thank you very much for that interesting perspective. Mr. Mulele, how do you see things from the private sector standpoint? I think you might still be on mute.
Okay, so from the supply side, really, I think in terms of product development, when you are designing these products, it's always very important, like I mentioned, to employ that customer-centric approach, because then that enables you to design a product that is responsible to client needs in as far as addressing climatic risk challenge is concerned. Also, it is important that when you, with pilots, really, you cannot have a business case. Business case only comes in when you upscale, because that upscaling enables you to diversify the risk geographically. Whereas with a pilot, because a pilot is localized, so if you get bad weather in that localized location, it's total burnout. So until such a time that you're able to upscale and diversify the risk. Then also distribution is very key. Like I said, the issue now of once you've achieved that scale, how do you now digitize the entire customer journey to make sure that it's effective, it's real time, and it's low cost. So that ensures viability because you're able to cut down your costs because of the issue again of the rule of large numbers.
So then, thank you very much. We'll open it up to questions. You can either use the functionality of raising your hand, or you can simply put your question in the chat. And with the panelists, if you may please indulge us for 5 to 10 more minutes as we answer the questions from the audience.
There are comments and questions on the platform, Leslie.
Lloyd, actually, I cannot see those. Maybe if you can be the co-moderator and read out the questions, please.
All right, no problem. Just one moment. I think there is a Oh. Right. The first from Prosper Timber is thank you for the presentation, Godfrey. I have two questions. How has been the adoption without government subsidy? Secondly, is insurance being provided as a standalone product or as embedded service? Leslie, if you could guide me, should I read all the questions at once or?
So then, Lloyd, just in the time that we have left, we will not be able to get through all the questions. So maybe if you can just select a few representative questions. And I think since that one is directly for Mr. Kiptum, maybe he can answer it while you prepare for the next questions. So
maybe also, Leslie, for Mr. Kiptum as well, there's another question. It's from Clyde. He says, thanks, Commissioner. Would you kindly shed more light on the role of different government ministries in the development of index insurance in Kenya and farmers' role in product development and pricing? We are also interested to know who does what to come up with an inclusive system. Thank you, Leslie. For Mr. Kiptum.
Thank you very much. I think the question from Prosper, the adoption by farmers without subsidy, not very good, but in some sectors it has been okay. It has been okay, and it is a product that can run, especially for dairy farmers and some crops that have gone into area yield index. Then yes, there is some bundling of some of those products. And there are a few standalone products like the one for livestock and part of agriculture. So it is still work in progress, but we expect that there will be more bundling, there will be more services being provided to add value to the farmers. But the ones that has no subsidy has been a bit poor, but we expect that it will pick up in the coming days. Then on the role of index, yes, this has been a role of the Ministry of Finance, the Ministry of Agriculture. The farmers have had an input in terms of designing and proposing what they like and what they want, how they want those risks captured and how they want to be paid. But of course, in terms of pricing, they have really very little role unless you have huge numbers, big numbers that then would influence the pricing to make it affordable or whatever it is that we require from farmers. But of course, everybody would want to pay the least cost possible if it was possible. Thank you, Leslie.
And then also, if I can just come in with a comment on subsidies in the market. I believe that subsidies will continue to be a part of the market, because when you look at even the world's biggest markets for agricultural insurance, like the US, like in Europe and in India, China, there is still an element of subsidies, not just for insurance, but for agriculture as a whole, given the importance of agriculture in terms of food security and also in terms of the overall economy. So again, in my view, I don't look at subsidies as necessarily being a bad thing. I look at it, in fact, as being a recognition by the government on the importance of agriculture. So Lloyd, my co-host, back over to you on any additional questions that have come through.
Thank you, Leslie. This one is a comment from Clyde. He says, I think our government should consider bundling index or non-index insurance products with credit or inputs under the government programs to improve uptake and accessibility of agricultural insurance. This will go a long way to build resilience of the farmers and promote sustainable financing models. And the other question is, Humphrey, would you share some insights on how you got to partner some developmental organizations who are into agriculture financing? Thank you.
So thank you, Lloyd. So maybe if we can start to hear from Crispin for the first question, and Humphrey, of course, for the last question. Thank you.
Sorry, Leslie. The question to me, was it to me? I thought the last question was for me.
No, actually, you can answer both, but if you can give your views on the bundling of insurance and credit, given the fact that the World Bank is taking a value chain approach, and then of course, if you want to come in after Henry,
Sure.
you are welcome as well.
Yeah, so I think the bundling of products is actually from a cost perspective and the outreach perspective, whereby if you are to deliver products and services separately, then they become expensive and also not married to the farmers' conditions. Hence the need to have a whole package to the farmers, which is what we certainly encourage. Actually, in our case, and more recently, actually in Zimbabwe, we have supported other activities like warehouse receipt system, whereby access to agriculture finance or credit is enabled by having farmers or producers or commodity holders access credit through the warehouse receipt system. Hence, if it were that there was an insurance product also that can be bundled on there, it becomes more efficient using the same infrastructure and systems that are available. So we normally encourage that holistic approach. And coming to how development partners can work with regulators, actually, I must say, we are owned by governments. The bank is owned by governments. So Humphrey and Dr. Grace are our bosses. So whatever they say they would like help on, because the government's role is to reduce poverty. Our role is to work with governments to support in the reduction of poverty. So it's pretty easy and straightforward. Whenever there is need, then there's need, then the regulators through the ministries of finance and other public institutions, whoever they decide that we work with and we support, it's pretty much straightforward and very easy. No need for much lobbying there, because we are owned by the governments that are working with the communities and with the farmers.
Thank you. Over to you, Mr. Mulele, for your perspective. And I'll be really surprised if you disagree with what Mr. Mawadza has just said.
No, I'm in agreement with, total agreement with what he has said. But with regard to how we reached out to international financing institutions, it was basically by way of reaching out to them in a way of lobbying for grant support. So I'll talk about GIF and the World Bank, since Crispin is on the call. So GIF and the World Bank, we partnered with them, I think, back in the year 2015, 2016, if I'm not mistaken. And they've given us grant support very specific to building our own capacity internally in terms of employing a full-time weather index analyst who basically interprets the data, the raw data, from the actuarial side to the underwriting side. So she or he is a link, really, between the actuary and the underwriting, Mayfair. The second thing is that, awareness is very, very key. I mean, I think all the speakers have talked about awareness as a challenge. So as part of that grant support was meant to assist us in terms of raising farmers' awareness. So in terms of sensitizing farmers by way of conducting trainings, by way of printing campaign materials, further interpreted into their local languages. So in the 7 major local languages of Zambia. So GIF support has really gone a long way in helping us upscale index insurance in Zambia. Of course, earlier on I mentioned other partners also, financial sector in Zambia, Musika, and the German international agency GIZ.
So really what's left for me to do is to sincerely thank our panelists. And I saw that there's been a question about African risk capacity, and I would be happy to give just a few words on who we are and what we do. So African Risk Capacity is a specialist parametric insurance and reinsurance company that provides insurance products against drought, flooding, and tropical cyclones. We are a specialized agency of the African Union, but we are also an independent insurance company with $100 million of capital and a BBB+ rating. And of course, if you are interested in getting in touch with us to understand how we can work together, we would absolutely welcome that. So gentlemen from the panel, thank you very much. It has been an absolute pleasure. We could have gone on for another few hours, but I think what we have shared today will be interesting and relevant to everyone. So thank you once again. And Lloyd, it's back over to you.
Thank you. Thank you so much, Leslie. Thank you to the panelists, Commissioner Kiptum, Chris Penn, and Henry. Thank you so much for your insights that you have shared with us. I will now hand over to our Director of Corporate Services, Ms. Samantha Nende, to give us vote of thanks, and also just to remind the participants that we're going to be uploading the link on our website, the link of this meeting, so that if you need to refer to it or you dropped out at some point, you will be able to follow through the webinar. Thank you very much. Madam Nende.
Thank you, Lloyd. I hope everybody can hear me.
Yes, we can hear and see you.
All right. Our eminent panelists, insurance entities, farmers, development partners, ladies and gentlemen, it is my privilege to give the vote of thanks on this important occasion. On behalf of the Insurance and Pensions Commission, I would like to extend our gratitude to all the panelists for gracing this event and sharing with us your views on your respective topics. Mr. Macheka of AFC, representing Dr. Basera, and the IPAC Commissioner, Dr. Grace Muradzikwa, your participation during this webinar demonstrates government's commitment to finding a solution to climate change-related risks, and the Commission thanks you for your continued support. Mr. Kiptum, the CEO and Commissioner of the Insurance Regulatory Authority of Kenya, Mr. Mlele, Manager Agriculture Specialist, Mayfair Insurance Company Zambia, the insights you shared with us today will go a long way in preparing us to develop and distribute appropriate agriculture insurance products. Mr. Maweza, representing the World Bank, and Mr. Chirema, representing ICZ, we thank you for joining us in this webinar and your inputs in helping the Commission to fulfill its mandate. In the same breath, the Commission thanks the insurance entities, development partners, farmers present. This event would not be possible without your participation. A big thank you goes to our sponsors, ICZ, Old Mutual and Emeritus Re, who facilitated live streaming of this webinar, and Alpha Media Holdings, who are our media partners. That is the Zimbabwe Independent, Newsday, and the Standard Digital platforms. It would be remiss of me, of course, not to thank the organizers at IPAC for putting this together. This is an event of high caliber, and it would not, of course, have happened overnight. The communication and the strategies that were employed to come up with it are commended, and we thank you for your efforts. Last but not least, a big thank you to the moderators for facilitating an interactive platform throughout this webinar. Ladies and gentlemen, our desire as the Commission is that this webinar does not end as just a one event, but should grow to be a platform for tangible impact to the farmers and the nation at large. We encourage more platforms like this for information exchange. So from the Commission, a big thank you and have a lovely day. Thank you, Lloyd. Back to you.
Thank you. Thank you very much, Ms. Nende. That brings us to the end of our webinar. Thank you very much. Have a great day and keep safe.
Thank you. Thank you, Lloyd. Thank you, everybody. Goodbye.
Thanks, Commissioner.
Thank you, Lloyd, and goodbye.
Short-term insurance, what is that? Any type of insurance that covers your possessions is short-term insurance. Having cover for your prized domestic possessions, business assets, and activities gives you a hassle-free life. Make short-term insurance a part of your life and know that your wealth is secure. Imagine waking up to a home ransacked by thieves or a business interrupted by a factory fire. You probably won't panic because you're insured. You tell yourself, keep calm, my insurer has it covered. There are 18 insurance companies in Zimbabwe that provide short-term insurance. Short-term insurance is the safest way to protect your wealth against life's uncertainties. Get your life back quickly when disaster strikes. Get covered today by your preferred short-term insurer.
Zita rangu ndinonzi Jennifer Maonye. Company yangu inonzi Asmos Investments. Tinosona ma-school uniforms, ma-curtains, corporate wear, men and ladies wear. Ndakatanga kushanda ne-Old Mutual muna May 2017. Ndiri customer yavo yekutanga kutora loan. Ndakapiwa loan nekuda kwekuti ndakanga ndine basa raida mari kuti basa iroro riitwe ripere. Ndakwanisa kutora loan iyi kanoita kechi 6 ndichibatsirwa na-relationship officer we-Old Mutual Finance. Vaindibatsira nekuuya vachiona kuti basa riri kufamba zvakanaka here, maorder angu ari kuenda nenguva here. Ndave neshop paEastgate Markets pandinoisa zvinhu zvandinenge ndasona kuti ndikwanise kutengesa ipapo, uyezve ndichihodha zvimwe kune vamwe vanenge vachiitawo mabasa avo emaoko. Ne-Old Mutual Finance unoenda kure.
Old Mutual Finance Private Limited is a microfinance company that is a member of the Old Mutual Zimbabwe Group. It was first licensed by the Reserve Bank of Zimbabwe in January 2017 as a credit-only microfinance company. The company's key focus is to provide financial solutions to financially excluded Zimbabweans with a strong focus on supporting sustainable business growth.
Since 2017 to date, Old Mutual Finance has served customers through a diversified product range, which includes business loans for groups, individuals, and registered SMEs, agribusiness loans for smallholder farmers, order finance loans, educational loans, civil servant loans, and salary-based loans.
Repayment period is from 1 to 12 months. Hashtag microfinance for your needs. Get a loan from Old Mutual Finance. Tora loan kubva Old Mutual Finance. Tata e-loan Old Mutual Finance.
Mina ibizo lami nguJennifer Mahonye. Ikhampani yami ithiwa yi-Asmos Investment. Ngiyathunga ama-school uniforms, corporate wear, ama-curtain, ladies le-menswear. Ngaqalisa ukusebenza le-Old Mutual ngoMay 2017. Lapho eyaqalisa khona ukupha ama-loan. Ngathatha i-loan yami yokuqala eyokuphakamisela lokuthuthumeza ibhizinisi yami ngoba ngangilomsebenzi owawufuna imali. ngakwanisa ukwenza umsebenzi wami ngesikhathi. Umuntu engisebenza laye i-relationship officer uzinikele ukuthi umsebenzi wami uhambe ngaphambili. Khathesi ngathatha iloni yami esi6 eyiyo engincedisayo ukukhula emabhizinisini ami. Ngile shop engilayo e-Eastgate Market lapho engithengisela khona izinto engizithungayo lalezo engiziwodayo. Ne-Old Mutual uyaphumelela.